What's up, everyone? Welcome to episode 2 of my brand new small account challenge of trading with $2,000. In today's episode, I'm going to give you a progress report of where the account stands in terms of growth as of today, day 3. And I'll give you a little sneak preview. So far, I've taken a total of 7 trades, and I want you to guess how many winners you think I've had. Well, I'll give it away. I've had 7 winners, 0 losers. How is it done? I'll tell you what, guys. It's really simple. You find yourself a sweatshirt, a sweater, something like this, something really nice looking. And you get 2 of them. You wear 2 of them. This becomes your lucky sweater. Now, wearing a lucky sweater, sky's the limit. Anything is possible because when you've got confidence, that's half the battle. Now, okay, I'm joking around a little bit, but there is some truth to this because confidence, obviously, is going to help you make better decisions when it comes to trading. Trading is a performance-based sport. Where does your confidence come from as a beginner? It comes from the track record that you've developed by trading first in a simulator. Once you've got that track record of profitability in the simulator, you know that you've got something that's working. So now when you flip the switch and you go live, you've already got some confidence coming to the table. That's what's going to separate you from all the other traders out there who throw real money into the market before they even know what the heck they're doing. Now, in addition to giving you a progress report of where I stand as of day 3, I'm going to walk you through the 7 trades I've taken so far. We also have another very important topic to discuss. I've had a lot of people who have been coming to me since I began these challenges. The first one was about 10 days ago. And they've been saying, Ross, I want to do a small account challenge also, but I don't know if this is the right time. Maybe they need to gain more experience. They're not quite ready yet. The account's not set up. So they'll say, Ross, how do I time when I should start? Because I don't want to start when the market's cold because I'm just setting myself up for failure. So what I'm going to do is I'm going to walk you through the 4 unique stages of each market cycle, from cold to warm to hot to exhausted and then back to cold. This is a cycle that repeats itself again and again and again. So once you know how to identify those 4 stages, you'll know exactly where we sit here today. All right, so let's go ahead and jump on the screen share and start breaking it down. I'm going to begin with the overview, a little progress report of where the account stands today. So for this leg of my small account challenge, I intended to have the balance at $2,000. I overshot it a little bit, took a little too much money out, so it's at $1,940. For those of you guys who have been tuning in, I began these small account challenges, well, really back in 2016. I have a really big one that I did in 2017 that I'm very well known for. I did another one in 2019, 2021. I've been repeating them every year, every couple years. And so just this past month, I funded a new account with $2,000, and I set out with a goal of demonstrating for you exactly the strategy that I would use to grow the account. Because there's no doubt that when you're trading in a big account, you trade with more risk. You're using bigger positions, but also the account gives you that cushion to take trades you might not take when you're in a tiny account. That was definitely true today. So number 1 was to demonstrate during these challenges how to trade in a small account. And then number 2 was to raise as much profit as I could, as much money as I could to donate to charity. So 10 days ago, funded my first account with $2,000 and I grew the account over the course of 6 days to $58,000. I donated all of it to the Boston Children's Hospital and St. Jude's Children's Hospital. So I'm just thrilled to have been able to do that. Just this past week on Monday, I made those donations. And so after that, I reset the account back down to $1,940. However, during that first leg of the challenge, when I first funded the account with $2,000, I was using a broker that gave me leverage. So that means I had 6 times leverage, which meant I had $12,000 of buying power. So on day 1, I bought a stock using the full $12,000 of buying power. And in that specific instance, I made about $3,000. So I was up on the $12,000 position, an average of 25%. But all of a sudden, my account here is up 150%, right? 25 times 6. So some of you guys said, look, Ross, this is cool, but I'm not going to use leverage. I'm a beginner trader. I don't feel comfortable doing it. Can you do a challenge without using leverage? And I said, you know, for you guys, I'll do it. Now, this is not good for the children of the Children's Hospital because this is less money that we're raising, but I understand you guys want to see this, and so you were willing to throw the children under the bus, and I said, if you insist. Again, I'm not happy about it, but look, we'll make it up with the next challenge. During the next challenge, I'm going to pull the leverage back off the shelf. But for this challenge, no leverage. So that means starting with $2,000, just under $2,000, times 1, that's how much buying power I have. So now that first trade, I used the full $2,000. the stock goes up 25%, let's just say for the sake of argument, goes up 25%, I've got a nice winner, but my account's up 25%. It's not going to be up 150% because I'm not using the leverage. So here we are, it's day now 3, and the account is up plus 45%. So there's no doubt that I'm trailing well behind where I was at as of day 3 in the other account. So in the account where I was using 6 times leverage, I got myself up to, $60,000 here by day 6. So I was able to just rapidly compound those gains. You would think that if everything is the same, this challenge in the same period of time, I should make $10,000, right? It's just divided by 6, not using leverage. And yet, I think it's unlikely that's going to happen. And why is that? Well, this gets to the topic for today's episode, the difference between a hot market and a cold market. It just so happened that when I began that small account challenge 10 days ago, we were in the middle of the hottest of the hot part of the cycle. And then towards the end of the challenge, the trend became exhausted, it cooled off. And so I actually began this new small account challenge on day 1 of a colder market. Okay, so the growth is going to be a little bit colder. So now if we jump back up here, we're going to go over the trades from today, but we're going to do that a little bit later in the episode. First, I want to talk about stage 1. So stage 1 is we're in a cold market right now. Let's just get level set. Stage 1 is the market's cold. So what does a cold market look like? In a cold market, we have less volatility. Things aren't really moving. Stocks that have news don't react that much. Buyers are scared. So we'll have a stock that'll come out with news and nothing happens. Buyers are afraid to buy it. And so nothing pops up, nothing really moves at all, and nobody makes money. So during a really cold market, long bias traders don't make money because nothing's moving up. And short bias traders don't make money either because they're looking to short strength. So nobody makes anything. All right, so how do we break this cycle? Chicken or the egg? What comes first? This is not good. The market's cold. So the way we break out a stage 1 cold market is with stage 2, the spark. The spark is a surprise move. So what's going to happen is unexpectedly, a stock is going to pop up, but it does not fail. It just keeps going higher and higher and higher and ends up making a huge move. Now, long bias traders are always going to be surprised by the first stock. We're not going to see it coming. We're going to have been in a market which may have lasted for days, but possibly weeks, that was cold. Not much was happening. We were showing up every day, but we just weren't seeing anything really opening up. So when this stock popped up on the scanner, we didn't think much of it. Next thing you know, it doesn't reverse. It keeps going higher. So those short sellers who were looking and hoping for anything to pop up to short it as it comes back down have gotten a short position and the stock is continuing to go higher. So now they're getting forced to cover it and it goes higher and higher and higher. Now, buyers feel FOMO because they missed the first big move. It's been cold for days or weeks. Finally, something moves. And of course, I miss it. So what do? We analyze that move and we try to draw conclusions and patterns about what will be the next stock to squeeze up. So let's say, for example, we've got this stock that ends up making, a huge move. It goes from $2 a share and just kind of starts creeping higher and higher. And then it starts to pull back. It looks like, okay, it's over. And then next thing you know, it rallies way back up and it goes even higher. And next thing you know, you've got a stock up, 3,000% in a single day. And we've seen it happen before. So now you better believe we're going to be asking all the questions about what was this company? What is the sector? Where is it located? What is the float? What was the price? Everything we can figure out about this, we're going to start marking down these as data points. And what we're going to be doing is creating a profile. This is the profile of our recent big move. So now that we have this profile in hand, what are we going to do with it? Well, we're going to begin searching the market in real time for stocks that resemble that profile. We're going to use scanners to find those. So what's going to happen is all of these traders are now sitting using scanners, searching for stocks that have similar characteristics, similar price, similar float, similar market cap, similar sector. Everything has to be very similar. And then when we see a stock that pops up on our scanners and looks similar, you better believe we're jumping in it and we're looking to ride that momentum. So look at this one, from $14 to $40 in one day, right? That's what we're looking for. So this happens, and now all of a sudden traders are now in this mindset of not wanting to miss the next one. So breaking out of a cold market, we require a spark. We require a surprise move. It's generally a stock that just has genuinely good news. It's a good catalyst. Sometimes it's a stock that short sellers just got too heavy on and the stock pushed higher, but usually what really is pushing the stock higher is a strong news catalyst. So stage three, so this is an example of another surprise move, a stock going from $4 to $34. This is a surprise move, and shorts are caught off guard and longs miss it. And so then stage three is where we now have sustained momentum. So additional stocks that fit the profile of the recent big move now are holding up. Traders are not wanting to miss it, so they jump in early. Shorts are cautious. They don't want to get run over again. So what does this create? More buying and less selling. So now all of a sudden the supply-demand imbalance has shifted. Now, demand is created by buying volume, right? No question about it. However, on the supply side, supply is created by the float, but it's also created by people that are just unloading shares and selling. So they offset demand. Now, typically demand in a strong stock will far exceed the supply, and that's when we end up seeing these 200, 300% moves. So stage three is where we get into this really hot cycle. Now, I can show you an example of this right here. So this period here was a cold market. And this lasted for almost a month. It was like 3 weeks where the market was cold. I sustained a few bigger red days. It wasn't so fun. I eventually decided to batten down the hatches. I was like, all right, look, this is about survival. I just want to not get beaten up anymore. So what do? I'm going to bring down my share size. I'm going to reduce my positions. I'm just going to bring everything down. And so would that have been a good time to be trading a small account? Not really, because we weren't getting big moves. When you're trading in a small account, you want big moves because you know you're never going to capture the full move, even if you only capture maybe a quarter of it. Well, a quarter of nothing is still nothing. So a quarter of a 50% move, well, you've still got something to work with there. So you really do want those bigger moves when your account is smaller. And then you could see here, all of a sudden we had the spark right there, and then a couple big green days, and now all of a sudden momentum's picking back up, confidence is coming back in, and being more aggressive. We had a similar thing kind of back here where it was a little colder, and then it really heated up, and then it cooled off, heated up, cooled off a little bit, and heated up. And the cycles were happening really quickly. So sometimes they're a little bit longer, and sometimes they're a little bit tighter together. However, these hot cycles don't remain in stage three forever. Eventually, we move on to stage four. And by the way, here's a couple examples of like hot market stage three. So stage three can last for a while, and you can do really well during a really hot market. So this is the phase where in one day, $230,000, right? Stock goes from $2 to $8. And I'm trading it with bigger size because now I know that there's a pattern. Anytime a stock meets this profile, has this catalyst, it goes up 300%. So you start, putting more money behind each of the trades. There's another day, $335,000 of profit. This obviously is not with my small accounts, with my big account. $278,000 of profit. These are huge moves. But then the theme gets exhausted. And that's what we saw this week. Towards the end of a theme, weaker companies will try to capitalize on the hype around this headline by putting out similar headlines. Similar headlines, but they lack the substance behind them. And so these are companies that are really trying to get attention for their stock. And as soon as the stock pops up, those companies on the inside are actually dumping shares. And so they're contributing to short selling. It's not just shorts that are selling, it's the actual company that's selling shares. It's really aggressive, but they're trying to capitalize on this hype. And so what's the result? The stock pops up and then comes all the way back down, and you have some really dramatic moves. Long bias traders were jumping in thinking, here we go, we've got the next catalyst. And the whole time the company is selling. And then long traders bail out, shorts get in, and you end up having a stock that goes, up 200% and then all the way back down very quickly. So shorts now become more aggressive. longs get nervous, they become more conservative, and the imbalance of supply and demand has now shifted back to the sell side. And this is the beginning of a cold market. So the theme is getting exhausted. We're seeing these huge reversals, huge rejections. And then next thing you know, you start to look at charts kind of like this, and it's not pretty. And this is what happened on Monday. Now, I made money on this. I made money trading the front side of the move, but then it ended up rolling over and giving back all of the gains. And when I saw that, I realized this is going to be a problem. Now, there's another example from last month, CWD. This is a stock that kind of spelled the end of that hot cycle, that previous hot cycle. So we had this stock that made this huge move, but look, it gave the whole thing back. I mean, it was just like the amount of selling was unbelievable. And so that, really casts a shadow on momentum, and it leaves traders feeling like I can't trust these setups. And then that's when we're back to stage one, cold market. So when you get to a point where every other company is putting out this same headline, they pop up, they fade, they pop up, they fade, and eventually they stop popping up because long bias traders are like, all right, I've gotten my hand slammed in the door enough times. I'm not going to do it. I'm not touching it. And shorts get really comfortable. Everything that pops up, they short it, they short it, they short it, comes back down until the surprise move, right? And the cycle starts over. One pops up, they think, oh, it's going to come back down, and then it keeps going higher, and next thing you know, it's up 200, 300, 400%. Something about the underlying dynamics of that particular stock allowed it to make a big move, and suddenly we're at the beginning of the new cycle. So first of all, don't feel bad if you miss that first move. We usually do. Usually it's unexpected. If you trade it, you totally undercapitalize on it, but that's the way it is. We were in a market where we had to be more conservative. So if you're sitting down right now, as of today, the market is in a cold cycle. So we were in a very hot cycle, and it really ended on Monday. So Tuesday was cold, Wednesday was colder, Thursday was colder, and today it was colder yet again. Now, in spite of that, Wednesday, Thursday, Friday, these 3 days were my first 3 days of this new small account challenge. And guess what? I was green all 3 days. But if we compare the progress that I made during the first challenge to the progress in this second challenge, well, it's not just that I'm using no leverage. We also have the condition of the overall market, which is a big variable. So on day one, I locked up 23% return on the account. I took 3 trades. I had 3 winners. 2 of them were decent size, and one of them was like a $20 winner. But nonetheless, I had 3 trades, 3 winners, $454, accounts up 23% on day one. Now that's not bad. I shouldn't, I shouldn't beat myself up for that. However, I will just a little bit, because if I pull up my slides here, this was day one in the last round of the small account challenge when I was using leverage. Okay, so we'll think about that though. Well, 4 times 6, 2,400, 2,800. So actually, if I had used 6 times leverage on all of those trades, I probably would have been closer to that $3,000 mark. So day one, maybe day one and day one were kind of equal, perhaps. Well, what about day two? All right, so day two of this small account challenge, I made yesterday $61.20. And I was like, I only took 1 trade. I had 1 entry and 1 exit. And if we pull up the chart on that stock, you'll see that it wasn't that exciting. The stock hit the scanner, it was popping up, and I was like, okay, here we go. I think I can work with this, and it didn't hold up. So I'm gonna back this chart up right here. You're gonna see right in this moment, look at this move. This is it's kind of unbelievable too. So we got this pop right here, pops up, has news, it pulls back, and I bought this dip right here, and it rips up right there. The only problem was I couldn't buy very many shares because, well, I'm not using leverage. And in total, it just wasn't a very big winner in terms of cents per share. So I think I ended up making about 30 cents a share on that trade, which was good, but as it turned out, it only amounted to about $60. So it was a smaller win. But we compare that with day 2 of the previous challenge, and I was up $5,900. So that is a stark contrast. Well, on that day, we had a stock that exploded. It went straight up. I was able to buy 5,000 shares of it using 6 times leverage, and it went up a full $1 a share. Wow. So with this trade on STSS, I was able to afford at $8 a share. I was able to afford about, it wasn't even, it was about 250 shares. So about 250 shares, it went up about 25, 30 cents. And that was it. That was all I could get. Now, I could have taken more trades. With this account, I do have settlement, so I can trade instantly. I can day trade as much as I want, but I didn't see anything else that looked good. And here's one of the things I learned. So about a year and a half ago, I made this discovery in my trading that on my red days, my accuracy was 45%, which is really pretty bad. I mean, obviously you could see my accuracy during these challenges have been right around 90%, which is fantastic, but I've been very picky about what I've been willing to trade. So on a typical day over the course of the last year, my accuracy has been 72%. But on losing days, just losing days, a year and a half ago before I made this change, my accuracy was 45%. And so I said to myself, if there was a way I could know that today is going to be a red day sooner, I would walk away. If you could call me in the morning and say, Ross, it's going to be a red day, I would go back to sleep, right? So I asked myself, what are the earliest symptoms that today is going to be a red day? And I realized that one of the first ones is the result of my first trade. Because in a hot market, that first trade, big winner, and all of a sudden I've got a cushion, I'm in the driver's seat, I've got the confidence, I'm feeling good. In a colder market, that first trade is a small winner. And in a poor market, that first trade is a loser. So on the first trade, usually I want to go in with smaller size just to kind of test the water and see how it feels. So as it turned out, on this first trade, I only got a small winner. I didn't have a lot of confidence. And so I said, you know what? It's better not to push it. I'm at the beginning of the small account challenge. The market's cold right now. Today's not the day to dig deep. Today's the day to batten down the hatches and just survive. So I survived to day 3. So today here is day 3, and I have a total of 3 trades from this morning. Locked up $375.13. It's a 15% gain. Again, this is good. Is it phenomenal? I'm being a little hard on myself, but if we look back at day 3 of my previous challenge, I was at 68%, another $7,500. So again, I was using leverage. We were having stocks that were making huge moves. So today, we had a couple of decent moves, SMX and ASTC. Now, you know what's interesting is today, I traded these stocks in my main account as well. I tried to. It's difficult to trade in 2 accounts at the same time. For me, I don't like missing opportunities. And if I see something that really looks good, I want to try to capitalize on it the best I can. So that means I have to trade it in both accounts. On SMX, I was red in my main account, but I was green in my small account. On ASTC, I was green in both, and I was green quite a bit more in my big account. It just ended up, I took a bigger position on it and just kind of worked out a little bit better. But what's interesting here is this is 10 times the profit, right? Well, 10x, trading with bigger positions, that kind of makes sense. All right, so these are the trades that I took here today, just as an example. So ASTC, this stock surprised me. It popped up this morning with news, and then it immediately reversed back down. So this was the pop right here. So we got this pop, and then it comes all the way back down, and I thought, well, that's cold market for you. I'm not jumping in it. I'm not touching it. No way, Jose. So it pops up, comes all the way back down, then goes sideways. And then all of a sudden, really out of nowhere, at the open, it rips up here from $6.20 all the way up to $8. So how did I trade this? Well, when this first started to pull away right here, it popped up, as you can see here, to 680. And so that actually gave a micro pullback because it tapped with that upper candle wick. I'll zoom in a little more on this. That's the upper candle wick, and then it dips down, then it curls back up. That's the first pullback. This is the second pullback. So now there's opportunities right here and right here. It goes sideways, and this was very interesting. This pop and this one here. So it started to do these big candle wicks, and basically as soon as that started happening, I was like, I don't think I'm going to be able to trust this anymore. So even though this ended up squeezing, let's see, the peak was $8, my biggest trades were right here, right at the very beginning. Basically right out of the gates, trading the front side of the move when it was moving quickly. So that was ASTC, trading it, got 2 trades on that in my small account. SMX, I got just 1 trade on. This one had news this morning. It's a relatively low float stock. The daily chart I thought looked okay for a turnaround story, curling back up. But again, we're in a little bit of a colder market. I wasn't sure it was going to work, but all of a sudden coming towards the open, this started to pull away right here. So how did I even find this stock? Well, I found it on my scans. So this morning, I scroll back here, it was at about, let's see, what time was it? 9:15. Yeah, 9:15, we're gonna go back. And all of a sudden, we're gonna see SMX hit the scanner. And as soon as it hit the scanner, I pulled it up and I said, okay, you know what? This thing is moving, I'm gonna jump in. So I got in right there after it hit the scanner at about $1.86. Goes up to a high of 215, but here's the thing with this trade. On SMX, it's cheaper. I was able to buy 1,144 shares. I got filled at 185. I was able to sell it at 201. That's $228 of profit. So this is on the cheaper side. Now, there was a higher price stock today that made that big move. It was EPSM. And this, for me, was not safe in the small account. It was too expensive. The spreads were too big. I couldn't trust it. And even in my big account, I didn't feel like I could trust it. Now, if this becomes a theme and we see more of this, it's something I'll pay attention to. But usually the theme isn't higher price stocks because most retail traders just avoid them. So as we sit right here, it's still relatively cold. Yes, there were some opportunities over the last 3 days, but the market's been cooler. What we really need is that next big surprise move to help us understand what the new profile is going to be for really hot stocks. Now, if you guys have not already checked out my full-length masterclass on the small account growth strategy, I'm going to put a link to that at the end of today's episode. I'm also going to put a link in the description and in the top comment where you guys can do a 2-week trial. During that trial, you can watch over my shoulder as I'm growing this account. So this challenge right now, I'm going to do 6 days. 6 days, leverage taken away. So it's just trading with no leverage, just the cash amount. Margin, I can trade as much as I want, but no leverage. At the end of 6 days, well, we're going to do a different challenge. So I've already kind of got an idea what I'm going to do. I'm going to pull the leverage back off the shelf, but what I'm going to do is a super small account. I'm going to make it like really tiny. So that's going to be the next challenge. And as always, all of this profit is going to get donated to charity. So thank you guys as always for tuning in. I hope you hit the thumbs up. I hope you're subscribed to the channel, and make sure you check out these episodes here if you want to learn more about the small account strategy.